Welcome, everybody, to another episode of the From Adversity to Abundance podcast. I am your host, Jamie Bateman, and today we have with us Robert Rolih, who is an international best-selling author and an investing educator. Robert, how are you doing today?
I'm great. Very thankful to be here at this podcast.
Yeah, thanks for joining us. Now, where are you joining us from?
So I'm from Slovenia and I still live in Slovenia. My business is international business. I have clients or members from 73 countries, but I still live in Slovenia. It's a very small country
Yeah.
just near Italy and Austria. So
Okay.
it's a nice place to live in.
Nice. Um, I know you said it's nighttime there right now, so thank you for taking the your evening to spend it with us. We appreciate that. So, I know my listener base tends to be real estate investors, residential real estate investors, those who, we're not necessarily anti-stock market, but they're very open to alternative investments and I guess taking ownership of your investing and your financial path and that's a big theme with my show is just taking ownership of your own situation, right? Whatever it is that we're talking about, but not abdicating that responsibility to someone else and 100% relying on quote unquote experts. So I feel like that may be something you can speak to, but um,
Yeah.
for the listener who may be unfamiliar with you, Robert, who are you and what are you up to today? And highlight some of the abundance that you're currently living in.
So I am very thankful that I have a total financial and time freedom. I run a lifestyle business, so it's just me and I have two employees in my company, plus some guys that are outsourced.
Hmm.
It's an amazing time that we are living in because you can run a global business with a very small team. And this kind of business can give you a lot of profits, and also it can give you a lot of time freedom. So this is something that never in the history, was this possible. So
Sure.
it's great that now we can run such businesses, and I'm happy that I'm running one of them.
Yeah, absolutely. Yeah, so that sounds really good. I been listening to an audiobook called the what is it? The Art of Spending Money, and a lot of the theme is about, you know, money is a tool and it's important, but
Yeah.
um it's so easy to get caught up in the kind of scaling and going bigger and that doesn't often lead
Yeah,
to
I
happiness
also
necessarily.
Yeah, I could scale
Yeah.
quite a lot, but I don't know. I decided that I am very happy with my customer base
Hmm.
currently, and I am expanding, but not. I'm not like working 24 hours per day
Hmm.
to expand my business.
Yeah.
I love to be with my family. I
Yeah.
love to be with kids. I don't want them to grow grow without a father
Right. Right.
or a father that is non-stop working non-stop. So
Yeah.
yeah, they see that I'm working hard, but I
Hmm.
also have a lot of time for them.
Right.
Uh, so
Yeah.
this is very, very important that you have this kind of balance.
Right. And at least think through that for yourself, right? And for your family and
Yeah,
whether you what do you want, right? Because it's very easy as an entrepreneur to get caught up in, more is better and scaling is
yeah.
better. I don't know if
Well, if
that's
you are this kind of if you are that kind of person, it's perfectly okay. You
sure.
just need to look into yourself and
Right.
decide what do you want to do.
Right.
And something that is good for me is not good for somebody else.
Right.
So you need to
Right.
find your own path, and yeah,
Yeah.
that's it.
Well, talk to us. I know wasn't always that way because I know the
Yeah,
financial side of things and investing is your forte, and that's obviously been the success you've had there has been a huge factor in allowing you to have this lifestyle business where it sounds like you can pick and choose somewhat when you want to work, how much you want to
yeah.
work. Um, but I know it wasn't always that way. So talk to us about your story and the beginnings and I don't think you were living in as much financial abundance a
Yeah.
while ago. So tell us about your story.
Yeah, I was growing up in when I was growing up, Slovenia was still part of the communist bloc,
Hmm.
and we never had money. We were always struggling when I was growing up. I can still remember my father. He had this Jimi Hendrix hairstyle, and
Nice.
he was a very tough guy. And whenever I asked him for something when I was a teenager, the reply was always the same. Robert, we cannot afford it. Money doesn't grow on trees. And that was
Right.
the story
Sure.
of my teenage years.
Hmm.
And maybe that was also the reason why I always had these big dreams.
Mm.
I wanted to become someone. I wanted to become wealthy.
Hmm.
This was maybe a motivation for me
Hmm.
to get out of this kind of life and to
Yeah.
really start living a life that is an amazing life. So when I was a student, I started my own company from scratch in a student dorm, and after like 5 years of hard work, this company finally started to produce quite a lot of profits.
Hmm.
And at that time, it was like I was in heaven. I couldn't
Sure.
believe that I'm making all that money. At that time, my business was a web design business.
Okay.
Yeah, internet was all the rage at that time. This was
Sure.
around the year 2000. And yeah, I learned how to code a bit, how to create websites, and that was my business.
Wow. Yeah.
And yeah, I earned a lot of money, but I at that time I knew that I should invest a part of the money that I'm
Mm.
making,
Hmm.
but I didn't know how. I was totally financially illiterate. So that at that time I trusted financial advisors.
Sure.
And year after year, I gave them all my business profits,
Mm.
and they were investing that money for me, and I was happy. And then after several years of doing that, me and my wife, Sarah, we had a conversation, and she said, Robert, I know that you trust these guys, but maybe just let's check what is happening with all that money and now where we stand financially. So
Sure.
I ordered all these account statements. And when the envelopes arrived, it was like, what? Are there some zeros missing?
Wow.
Money that I worked hard to earn
Right.
was mostly gone.
Well, I was going to say just quickly, 5 years, just to jump back briefly, 5 years at that age is a really long time. So
Yeah.
I mean, so that's a lot of time and effort, it sounds like, that you put in, to getting
Yeah.
to that point. So it's not like it was just handed to you on a
No, it was
silver
not
platter.
like an overnight success. It's
Right.
it's never an overnight success.
No.
Yeah, and it was really depressing that period of time for me because you are working hard, you are
Right.
making a lot of money, and then
Right.
everything just
So these
disappears.
were financial advisors in Slovenia or in the US
Yeah,
or
in Slovenia,
okay, I
I
assume.
had also one international
Okay.
money
Gotcha.
manager and so on.
Uh-huh.
But of course, they put my money into high fee products
Mm.
where they were making a lot of fees,
Hmm.
and I was making very little. Then they also put some of my money into short-term speculative trading,
Mm.
forex trading, and stuff like this.
Mm. Hmm.
I didn't know that this is a bad thing or this is a stupid thing at that time.
Hmm.
Like I said, I was totally financially illiterate.
Sure.
And yeah, they made a lot of money with all that, but
But you didn't.
yeah, I was left with some breadcrumbs.
Wow.
And that was a real like fall from grace for me.
Hmm.
And that was the moment when I decided that I need to learn
Mm.
how to invest on my own.
Okay.
That I cannot trust the Wall Street guys.
Right.
I cannot trust financial advisors.
Hmm.
I need to learn how to do it. I need to take a look behind the scenes of the financial industry and
Hmm.
see what is happening with my money.
Yeah.
And that was the start of my journey,
So
where
paint the
I started
picture
to
at
learn.
that point for us. What when you decided to take ownership of your financial and investing, life basically. How old were you, and what were your kind of living conditions and personal circumstances at
Yeah.
that point?
So I was still okay because my business was running and it was
Mm,
still profitable.
hmm
The only problem was that I became depressed and I
mm,
lost motivation to work because of all that problems
sure.
with investing. But my business was still okay, was still healthy,
Mm,
and that is, I didn't become homeless or something. I was
sure.
still okay financially,
Yeah.
and at that time I was also lucky that I was working with Brian Tracy.
Mm,
This is a
hmm
very famous guy in the personal development field.
Right.
Um, yeah, author, and he was my good friend at that time because
Oh,
we
wow.
invited him to Slovenia, to my country, to speak at our seminars 3 times. And I was lucky that I had all these problems right when we had the third seminar with him. And
Hmm.
after that seminar, I asked him if we can go to dinner together because I have all of these issues.
Yeah.
And I spilled out all these problems at the
Yeah.
dinner. And
Hmm.
then Brian Tracy said something that totally changed my life.
Which was?
Robert, Robert, it doesn't matter how much you earn. All that matters is if you have the skills to manage your money and to invest it.
Hmm.
And at that moment, I realized I don't have these skills. I blindly trust the financial industry.
Right. Right.
So that was the moment when I made this decision for me
Yeah.
to start learning,
Gotcha. I
to
want to,
take ownership,
yeah, exactly. Which
of,
is a theme of our show is taking ownership of your
yeah,
situation, your
yeah,
financial situation,
yeah.
in particular. But I want to highlight something that you probably, it may be easy to gloss over is that you said, I was lucky to have all of these problems when you were meeting with Brian Tracy. But just the way that was
Yeah.
framed is, I'm guessing at the time you weren't thinking, "Oh, I'm really lucky to have all of these problems." But in hindsight, you're what you're saying is you're lucky that, well, correct me if I'm wrong. I think you're saying that you're lucky that you were had the opportunity to meet with him when you had those problems, and that the
Yeah.
timing worked.
That was the lucky part.
Yeah,
But in hindsight, of course, everything was aligning because
yeah,
right now
exactly.
I'm running this business,
Right,
financial education and investment education, and I really
right.
love it.
Yeah,
And this is basically the business of my dreams.
right.
And if I
And
didn't have all that problems
right,
at
you
that
wouldn't be
time,
where you are
I would
today.
never be here
Right. So
today.
I want to highlight that for the listener because it's easy when you're in the thick of it, when you're going through really hard times, when you're going through struggles, which we all do on some version, some level, you know, it's very easy to think this is all bad, this is terrible, this
Yeah, this
storm
is
is
the
going to
end and
last
so on.
forever. Yeah, there's nothing good that's going to come out of this. This is, and you said you were depressed
But
yourself.
every problem is also an opportunity.
Yes,
And
exactly.
whenever
So,
you have a problem in your life, you can always think, okay, what kind of opportunity is this? What can I
right,
learn from this? What can I do
right.
based on this, and
And it's
so
very
on.
hard
So
to
you
do that
can,
in the moment, but that's why we have this
yeah,
show is and it's because you've had the chance to look back on that and now see, okay, it wasn't all terrible in the grand scheme of things, it's actually turned out a
yeah.
lot better. So, but specifically, what did you do, in this you said you invested in yourself to
Yeah.
learn, about investing and to take ownership of your financial and investing situation. So what did you do specifically, and what can the listener do practically
Yeah.
today that could help them, right now be a better investor?
So I did three things.
Okay.
First, I started to read books about investing and
Mhm.
personal finance. So this was the first thing that I did. Then I started to go to a lot of workshops and seminars on
Okay.
this topic. And the third thing, I started to talk with financial industry insiders
Okay.
and do interviews with them and go to dinner or lunch with them and so on. So I started to learn all there is to know about investing, and that was the turning point for me
Okay.
because I learned that I was making a lot of mistakes when I trusted these financial advisors,
hmm
and that investing is very simple in the end. It's the financial industry that
hmm
works hard to make it complex
hmm
because they earn a lot of money through
hmm
complexity.
Mm.
And if you simplify investing, if you
Hmm.
just keep your fees low, if you invest in good long-term products,
Hmm.
then everything is easy, simple and easy.
Hmm.
And sometimes you also need to go against the herd.
Hmm.
When everybody's doing something, you need to take the other
Yeah,
side.
sure.
And yeah, all this is very easy, but of course, you need to learn all that
You got to
first.
get
And
educated first. It doesn't mean you
yeah,
should just jump in blind.
yeah.
So, would you say no one should ever use a financial advisor? They should never trust their money with any financial advisor?
Well, not all financial advisors are bad,
Okay.
but you know, a lot of them are. A lot
Okay.
of them
Yeah.
have when investing, a lot of financial advisors don't have the same interests
Mhm.
as you at heart.
Right.
They want to make as much money as possible through commissions and fees,
Hmm.
and you want to have great returns. And
Right.
this doesn't align.
Mhm.
This is not compatible. So you need to, if you are using financial advisors, you need to really know what you are paying
Mhm.
for their
Mhm.
services and
Right.
how much money does this account for in the long run? Because, for example, if
Hmm.
somebody says to you, if a financial advisor says to you, "Oh, I only charge a small 1% management fee,"
Hmm.
okay, a 1% annual management fee,
Yeah.
it
Doesn't
sounds
sound like a
small for
lot.
you, it
Right.
sounds nothing,
Right.
but over the long run, this can destroy your pension pot. This can drive your returns to the ground. And this is something that people are not aware of.
Mm.
The long-term compounding effect of these small fees.
Hmm.
And I can give you a couple of
Yeah,
examples if
sure.
we have some time.
Give us
Yeah.
one.
Yeah. So, for example, if you pay a 1% management fee to your financial advisor or a fund,
Hmm.
this may sound small. But it's not just this fee that you lose. You also lose all the growth that money could have made for you over time. So if your portfolio, for example, is now worth $100,000,
Hmm.
a 1% fee means you pay 1,000 in the first year.
Yeah.
And that 1,000 is not only gone, but it's no longer growing for you.
Mm.
So if the market grows by, for example, 8% per year, that 1,000 could have turned into more than 10,000 over 30 years. And
Mm.
that's just from 1 year of fees. So if you account all these fees over, let's say, 30-year span, the total cost is over 120,000 in lost growth. And that's more than your current portfolio value. So this is the real effect of these fees.
In the
It's
long
not
term.
just 1%, but it's much, much, much more because you have this compounding
Yeah.
effect that is working against you in
Right.
in this case.
So just let's assume I get educated, right? Say I take the next month or two and I spend tons of time getting educated and now I'm educated. Doesn't it still require a lot of time for me to do what the financial advisor was doing for me?
No, not really. Because, for example, the simplest strategy for passive investing is simply to invest in a simple low-cost ETF. This is exchange traded fund. This
Hmm.
is basically you invest at one time you invest in, let's say, 1,000 stocks or 500 stocks. Basically,
Hmm.
you invest in S&P 500
Yeah.
with one single investment. And you just
Gotcha.
add to this fund over time.
Yeah.
And this fund has almost zero fees. It has less than 0.1% annual fee.
Wow. Yeah.
Sometimes these funds can have 0.03 percent fee that is almost nothing.
Mhm.
So you are just investing in the lowest fee
Right.
vehicle or
Hmm.
product, and you don't care about any advisor and so on because statistically speaking,
Yeah.
ETFs over a long period of time outperform like 95 to 99% of all the experts.
Yeah. I've heard
So,
it. I've heard at least.
including Warren Buffett. For
Right.
example,
What?
my wife, I was
Hmm.
just comparing the results of my wife's portfolio because she is only investing in two ETFs, in a
Okay.
global one and a technology
Okay.
ETF.
Yeah.
And in the last 2 decades, she is outperforming Warren Buffett by a huge margin.
Wow.
Because, Warren Buffett missed the train on technology stocks.
Mm,
Of course, when you get older, you become more conservative,
sure. Right.
and that of course drags the returns down.
Yeah, for sure.
And yeah, and it's very simple to just invest in a simple ETF for the long run, and
Hmm.
you don't care about anything,
So,
you know.
and I do want to get back to your story as well and see how
Yeah.
what kind of growth you were able to experience financially and business wise. But so do you advise or recommend people invest primarily in stocks, or do you also invest in other asset classes? How do you evaluate asset classes, or is this conversation is your focus really about the stock market?
Yeah, this is a very good question. Of course, in my portfolio and in my model portfolio that I have for my members, we invest most of our money goes towards stocks.
Hmm.
Okay, stocks are the biggest part of the portfolio, of course.
Yeah.
Then we have a bit in precious metals, but
Okay.
just for safety. Okay, precious metals went up a lot, especially
Right, right,
gold
right.
went
That's
up a
true.
lot
Yes.
in the last years.
Silver for
Uh,
sure, right? People are selling
but
their silver now.
we never invested in gold or silver
Mm,
in order to get great returns.
right.
We only invested for safety because this is just a safety play. And of course, if you have some great returns, you are
That's
happy with them and
right.
perfect.
Right.
But you don't invest in gold in order to get great returns because
Hmm.
statistically speaking, over the long run, the stock market will very, very likely outperform precious metals.
Sure. Yeah.
Then we also invest in Bitcoin and
Okay.
maybe some other cryptos, but a smaller part of the portfolio.
Hmm.
But we don't do that for the long run, but
Mm.
we take advantage of these Bitcoin cycles.
Oh,
And
okay.
we were very happy that in this cycle we were entering Bitcoin. We were buying Bitcoin when it was from 16,200 to 55,000. And then we sold Bitcoin when it was 120,000, 106,000, and 96,000.
Because it's
So in three
getting
parts.
crushed now, right? It's really getting
Yeah, now it's
hammered.
getting crushed. And I just yesterday I also published this on social media,
Mm.
a thank you email from one of my members.
Mm.
She is called Didi, and she
Hmm.
said, "Wow, I'm so grateful that we exited crypto a while ago, or already in November 2025,
Mm.
because now all my friends are basically
They're distraught.
devastated because they
Right.
lost so much money, and
Right.
we exited at the top, you know.
Okay.
So
Well,
with crypto." You
mhm.
need to be, yeah, we are long-term investors, but long-term in crypto means a couple of years, not couple of
Right.
decades.
So you do need to be a little bit more active with the crypto part of the portfolio, it
Yeah,
sounds like.
a bit.
Yeah.
So for example, I was buying Bitcoin in 2022, 2023. Then we
Hmm.
stopped and we exited
Hmm.
at the end of 2025
Yeah.
and the beginning of 2026. And
So,
then maybe some new opportunities will pop up.
mhm.
Maybe in the end of this year, we will see. We will
Yeah.
see what market gives us. But Bitcoin will not go away.
Okay.
Bitcoin is an amazing asset class. It's still young.
Mm.
It's like a teenager jumping
Hmm.
up and down.
Right.
It's very unpredictable right now,
Yeah.
but it's a newer version of gold. It's a digital gold in the making. I need to
Okay.
emphasize this, in the making. It's
Okay.
not there yet. It's not a store of value yet. It's not a
Right.
protection against bad things happening in the world yet, but very likely in 5 to 10 year period, it will become
Yeah.
something like
Well, I
this.
have a couple of teenagers, and I can relate to the experiencing the chaos and the ups and downs,
Yeah.
and almost asking yourself, what have I done? uh
Yeah.
and
In
then realizing and then
crypto,
seeing to be honest and then seeing incredible growth spurts as well where
yeah,
all of a sudden they move toward being more of an adult and it's like whoa
yeah.
this is amazing and I didn't couldn't always predict when
Yeah,
those
in crypto, you need to be very good at going against the herd.
mm,
Let me give you an example.
hmm
November 2022,
hmm
Bitcoin went from 66,000 in 2021 to 16,000 in November 2022. So that
wow
was like 77% drop.
it's huge
At that time, nobody wanted to buy Bitcoin.
right
Everybody was saying Bitcoin is going to zero. And Jim Cramer on CNBC, the famous
yeah
TV host,
yeah
he had a show and he said, "Get out of crypto while you can." And just one day later, because I saw that show, one day later, I issued a buy signal for all my members. I said, "I'm buying Bitcoin now." I don't know if this is the bottom, but I'm
right
buying Bitcoin now
wow
because I am good at going against the herd. And
right
when I see a panic like this in the
right
market, in a good asset, in an asset that has long-term a great perspective in
right
the long
right right
run, I will go against the
okay
herd, Or
right
maybe the other example, silver. Silver went up 600% from the bear market low, and it went to 120. And at 112, I posted on social media, I don't think now it's a good time to buy silver. You are a bit too late.
hmm
Don't buy because of fear of missing out." And
right
just next day, silver went down
Mm.
35%.
Wow.
So yeah, sometimes I'm good at spotting this
Right.
moment when there is a total euphoria in the
Yeah.
market or total panic in the
What
market.
about, I know maybe difficult, not being in the US to invest in like US real estate or do you invest in real estate or do you have any thoughts
I
on
invest in real estate. Yeah, I
okay.
invest in real estate, but not in the US,
Okay.
because I believe that when investing in real estate, you need to,
Know the
you
market.
know, you
Uh,
need to you need to invest where you can easily travel and where you
Right.
can easily see the
Yeah.
the the
The
real estate
property.
that you are buying
So
or
how
selling.
do you invest in real estate? Like
So right now we are only, so my family, me and my wife,
Mhm.
we are investing in residential real estate.
Okay.
We have several apartments
Okay.
in Slovenia and also outside of Slovenia,
Okay.
but only in places where we regularly travel.
Okay. Gotcha. So I mean,
So we know the market.
yeah.
We know where good places are and so on.
hmm Okay. So do you do
So it's
that?
not it's not like that we are professional investors in real estate.
Right.
Far from it. This is not like my specialty.
Yeah.
But in the last years, we diversified our
hmm
portfolio also
Yeah.
into real
So you
estate.
do
Yeah.
think real estate can have a place in an
Yeah,
investment
sure, sure.
portfolio?
Yeah,
Got
it's a very safe
yeah,
asset class.
right. I
It will
agree.
not go up or down 50%
Yeah, no.
overnight like
I mean, and
Bitcoin.
that's, I run a mortgage note fund, for example, and we buy first lien mortgage notes and the collateral is the real estate. And it's not to say that you can't lose money with mortgage notes because you can, but we're not going to compete with a crypto fund on the potential upside. There's just no
Yeah, sure.
chance of it, right?
Yeah, but
But
also we will not have such such
no, I
downsides
mean,
as
honestly, if the properties,
because I
yeah,
was
if the
just watching Tommy Lee, a very famous
okay,
investor. He's now down like 8 billion on his
wow,
Ethereum position. It's
wow,
crazy,
that
That's
is
one of
insane,
the
right?
top five documented biggest losses, in
Wow,
investing history or something. If he
yeah,
sold today. Now maybe Ethereum will go up,
right,
and
right,
in a couple of years it will be higher, but I don't know.
right.
I wouldn't like to be in his shoes.
Yeah, no, I mean, and I'm not. I still have. I'm not like. I'm very pro real estate investing, but I certainly I have money in stocks and bonds as well. But and every situation is different. Like we've touched on, every personal finance is personal, right? But
Yeah.
But I don't really if the collateral drops, by 10% in our case, it really doesn't affect anything as far as the
Yeah.
actual investment that we're in the asset class because we're buying the debt. But um, so okay, so and it sounds like you're open to other asset classes and as
Yeah,
time
sure, sure.
and as you get older, move toward quote unquote retirement, maybe shifting your portfolio to be more conservative
Yeah,
and
you
that
need
kind
to
of thing.
shift a bit, yeah, to
Yeah.
be more a bit conservative. Yeah, sure.
Okay, so what else besides not entrusting your money and you're investing with a financial expert? What else would you say that's controversial as far as your own take on investing?
Yeah, after that experience that I had in the start of my investing career,
Yeah.
uh, I never trade like day trading or
Mm,
swing trading.
yeah.
This can be very dangerous, and
Sure.
only the financial industry is winning this
Mm,
short-term trading game.
gotcha.
So I stay away from short-term trading. It's a fool's errand.
I
it's
mean, it's
it's
not
worse
really
than casino.
investing anyway, right?
No, that's just speculating on a
Yeah.
short-term price movements, and
Right.
very, very few investors or traders can do that consistently.
Sure.
Profit
Profitably.
can be profitable consistently.
Right, right.
Most investors, like 99% of investors who are doing that, they lose their money. Yeah,
Right. And then they stop doing it because they have no money to invest.
yeah.
So let's go back to your story and as we move toward the end of the show and some rapid fire questions, and I do have some other questions for you, but um, what type of financial abundance did you experience once you got educated and started to take ownership of your own situation? If you, yeah, you can be as specific as you want, obviously,
Yeah,
but how
maybe.
did your life change, after that?
Yeah, it changed a lot. It changed a lot because right now, with my family, we love to travel. We go to different exotic places, like in the Caribbean, in the Indian Ocean, and so on. So we can travel a lot. We can stay at great hotels. This is something that I never dreamt that I will
Right,
achieve.
right.
But yeah, it happened. So it's small things in life, small
Sure.
things that you don't need to worry about. Okay, what kind of hotel can we afford? We are going to a good hotel.
Right. So you're not
You
saying you're
you
not
don't
giving
need to
your
worry about these things. That's super
right.
important.
You're not telling your kids the same thing that your father told you. It sounds like that,
Yeah, yeah,
we
yeah,
cannot afford it.
yeah.
Which I think he probably had good reason to have that mindset.
Yeah, it was. There were different times.
Right,
Also, like I said, at that time, Slovenia was still just getting out of the communist bloc.
right,
Gained independence
right.
in 1991. So it was
It makes more
different
sense.
times, and
Makes sense in the
yeah,
context. Right,
there were no opportunities for people here to
right.
to really build wealth.
Yeah,
So yeah,
got it. Um, all right, are you ready for some rapid fire questions?
yeah, sure. Go ahead.
What's one thing that people misunderstand about you? This one's a little tough, but what's something that people misunderstand about you?
A funny thing, sometimes people from Slovenia think that I'm American.
Oh, okay. That's funny.
Yeah, so that's the
That's
sometimes
a
very
good one.
funny for me, because somebody said, "But are you from Slovenia?" I said, "Yeah, yes, I speak Slovene."
Right, right. If you could go back and give your 18-year-old self some advice, what would that be?
Be very conservative when it comes to investing, and
Okay.
be very aggressive when it comes to money making.
Interesting. So money making
So
is what the business
when
side of
it
things?
comes to money making, you need to be aggressive. You need to learn a lot of stuff. You need
Mhm.
to take chances. You need to do a lot of things
Yeah.
to basically uh, get lucky. You
Yeah.
need to be very active to get lucky.
Right, right.
And then when it comes to investing, I was always too aggressive when I was
Mm.
young. And
Gotcha.
I lost a lot of money because I was too
Okay.
aggressive.
Okay.
So
Well,
yeah,
that's
I need
good.
to be a bit more conservative.
Yeah, that's really good advice. I never heard it put that way. If you were given $10 million tomorrow, what would you do with it?
No, I already have them, so I would just add them to my portfolio.
Gotcha. So same thing you're already
I would
doing.
invest, yeah, I would invest that money.
What's a challenge that you're facing in your business right now or in your investing career? Just what's one
Uh,
difficulty or challenge that you're facing?
Yeah, good question. Facebook advertising. Facebook is always banning
Mm,
our accounts, even
yeah,
though we comply with all their guidelines and
yeah.
so on. But
I never
it's a pain.
understand. Yeah, and then
It's a pain in
there's
the
no
ass.
support from Meta
Yeah,
from
no support, nothing. So it's terrible. But
yeah.
the funny thing is that Facebook is the most effective
Mm,
channel for us,
okay,
to advertise. But unfortunately, we are very limited
right.
because of that.
Um, I know you have your own book that you put out, Million Dollar Decision. I
Yeah.
want to talk about that, but before we get there, what's another book that you could recommend for our listener?
I would say Psychology of Money. I think it's the same author as the book that you mentioned earlier
Yes,
about the art of spending money.
yeah, and
So this is Housel, I think.
exactly.
Morgan,
Morgan Housel.
yeah,
I may have
Morgan.
I hope I said the title. I may have said the title incorrectly, but you're right. It is the same author,
Yeah,
Psychology of
though
Money, and
the listeners can go to Google and check it
yeah,
out. But it's the Psychology of Money. It's really an amazing book. Yeah,
it is very good. And yeah, he's very good yeah, it is the art of spending money, but you're right. It's the same investor, Morgan
yeah,
Housel.
same
Both
author.
very good books. I thought of him again in the book I'm listening to when we were talking about your father because he says something about all behavior makes sense with enough information. So your father's directive to you made sense with given the context of where the country
Yeah,
was and the financial
yeah, sure.
economic situation. Um, okay, looking forward, I know you don't have a crystal ball, but for investing, is there anything you're shifting with your own approach or your members' approach over the next, say, couple of years?
Well, we are preparing to take advantage of the bear market in crypto. I
Okay.
think that a lot of money will can be made if you invest when everybody will be depressed, very depressed in the crypto space.
Hmm.
Then, of course, new technologies,
Mm.
disruptive technologies. This is a team that I am also investing in. And the stock market in general, I think that it will do fine. I try to stay away from gold and silver now.
Mm.
We invested a lot a couple of years back,
Hmm.
but now I think it's a bit too inflated, so I'm staying away. So yeah, that's basically it.
Gotcha. Um, Talk more about your book. Um, yeah, I mean, just give us an overview and kind of the what the listener might gain from obtaining a copy of your book.
Yeah, it's a very easy to understand book. It's also quite funny because I I try to use some humor
Hmm.
and I tried to make investing a bit more fun.
Nice.
So yeah, I talk about the effect of these small commissions and fees on the long-term returns.
Hmm.
I talk about the dangers of short-term trading. I talk about the difference between ETFs and mutual funds. I talk about how to invest for your retirement. So it's a so it's for someone who is just getting started in the
Okay.
investing world.
Right.
It's a guide that is easy to understand and a bit of
Hmm.
humor.
So, before we start to wrap up here, if somebody's, say, you know, I don't know, 25, 30 years old and they've started a 401k, they have a career, and unfortunately the 401k has become, at least in the US, what everyone equates to that's retirement investing is the
Yeah.
same thing as a 401k, even though it was never intended to be
Mhm.
the primary vehicle. But what would you say, is one thing they should do? Should they stop investing in their 401k because they're paying high fees, or What should they
No,
do?
they just need to be careful what products are in their
Gotcha.
401ks.
Okay.
So just check what kind of fees are you paying
Uh-huh.
for different products in your 401k,
Yeah.
and stick to maybe just simple ETFs. So
Mhm.
when it comes to the stock market, let's just stick to simple
Right.
low-cost ETFs, and that's it.
Got it. Okay. That makes a lot of sense. Um, awesome. What is one question that you wish I'd asked that I haven't?
That's a good question.
Anything
Uh,
you want to cover before we wrap up?
um, Best movie.
What's your favorite movie?
Oh, it's Blade Runner. Blade
Oh,
Runner.
okay. Blade Runner.
Yeah,
Yeah.
with Harrison Ford.
Yeah. It's a good movie. For sure.
It's a very good movie about that will become very relevant when
Mm,
robots are
mm,
mainstream.
mm.
So where is
Sure.
the where is the what differs us from robots? Where is
Mm,
the line, that you need to cross? Yeah,
right.
these are
Right, right.
interesting questions.
Well, I really enjoyed this conversation, Robert. I think for me and for the listener, the main, at least for me, the main thing I got, the main takeaway really is for the listener to, and for all of us to take ownership of our own
Yeah.
financial situation and take ownership of our investing, you know,
Yeah, don't just blindly trust
right,
advisors or financial industry Wall
right,
Streeters. You
right.
need to do your own research always.
Yeah, so that doesn't mean you should never take an expert's advice, right? I mean, you're
Yeah,
an
sure.
expert and we're people are taking your advice really, that's very different from just blindly handing over your money and hoping for the
Yeah,
best. And
and today we have ChatGPT, we have all these AI
yeah,
tools. You can always double check things. You
right.
can always ask ChatGPT or other tools
Yeah,
for opinion. So
sure.
yeah, it's a different world, and there are a lot
Right.
of tools that can help us in our investing journey.
Yeah, it is pretty incredible. Well, Robert, thank you for spending your time with us. Where can our listener find you online?
Well, the easiest way is to go to my website. It's my name and surname.com. So robertrolih.com. Very simple and easy. Yeah.
Yeah, and the last name is spelled Rolih, just for the listener who
Yeah.
isn't watching on YouTube. RobertRolih.com. Awesome. Any parting words, Robert?
Yeah, like I said, investing is simple. It's the financial industry that works hard to make it complex. Just remember this and you will be okay.
Perfect. I love it. Awesome. Well, thank you again for spending your time with us, and thank you to the listener for spending your most valuable resource with us, and that is your time. Thanks, everyone. We appreciate it.
Thank you.
Take care.
Bye.
Bye.